Berkshire Hathaway has made significant changes to its investment portfolio, which has attracted attention in the investment world. They've taken a thoughtful and strategic approach, as seen in their latest financial filing. They sold off a substantial amount of investments, totaling $1.8 billion on February 14, 2024. And they did this without making new purchases. This gives us a little glimpse of the inner workings of the mind of Warren Buffett, the CEO of Berkshire Hathaway. What exactly are Buffett's investment secrets, and how does he know when to execute his plans? We'll answer all of that in today's video. Berkshire Hathaway made significant moves by selling a massive 79.7 million shares of HP, which represented a drastic reduction of 78% in their holdings and resulted in an estimated cash inflow of $2.2 billion. Additionally, there was a minor adjustment in its Apple holdings, with 10 million shares, or 1% of its holdings, sold for $1.8 billion by the end of the fourth quarter. However, the portfolio reshuffling was not limited to these tech giants. Berkshire Hathaway completely divested its positions in various other notable companies, including D.R. Horton, Marley, Stone Sea, and Globe Life, generating substantial proceeds. As you can see, Warren Buffett's strategy appears to involve actively managing Berkshire Hathaway's investment portfolio by selling off holdings in companies that no longer align with his investment thesis or where he sees limited growth potential. This approach allows him to reallocate capital to more promising opportunities. Buffett's strategy involves continuously evaluating and adjusting Berkshire Hathaway's investment portfolio to capitalize on opportunities and maximize returns over the long term. This approach reflects his disciplined and patient approach to investing, focusing on fundamental analysis and seeking out undervalued assets with strong growth prospects. But the interest doesn't end with sales. The pressing question is, what did Berkshire Hathaway opt to invest in during this deliberate period of quiet activity? Revealing the new additions to Buffett's portfolio not only quenches our curiosity, but also offers essential insights into the investment tactics of the ultra-wealthy and their interpretations of market trends. Chevron Corp. CVX. At the forefront is Chevron Corp. CVX, indicated by Berkshire Hathaway's decision to augment its stake by an additional 15.8 million shares, totaling an estimated $2.5 billion investment. Chevron's position in Berkshire Hathaway's portfolio not only signifies a vote of confidence, but also reflects a bullish outlook on the company's future. This strategic move underscores Berkshire Hathaway's significant commitment to Chevron, which has been evident since the third quarter of 2020. Despite facing challenges in the sector in 2023, Chevron's fourth quarter results, which exceeded expectations, suggest a potential shift in its trajectory, positioning it favorably to potentially outperform the sector benchmark, the Energy Select Sector SPDR Fund, XLE. This development suggests a possible underappreciation of Chevron by the market, presenting an opportune moment for investors to align with the company as it stands on the brink of a significant rebound. Furthermore, Chevron's strategic investments in profitable growth amidst reduced sector investments and competitive challenges highlight a clear path towards capitalizing on high-value projects. This strategic direction is not merely about weathering cyclical downturns, but about laying the groundwork for sustained growth and market leadership. Chevron's recent increase in capital expenditures, projected to be between $15.5 to $16.5 billion, reflects its commitment to scaling operations and enhancing shareholder value. The balanced pricing dynamics of Chevron's stock relative to its return on capital employed, ROCE, suggest a well-rounded investment opportunity, acknowledging Chevron's long-term competitive edge and its adeptness in navigating the cyclical nature of the oil and gas industry. Moreover, Chevron's strategic investments, particularly in the Permian Basin, demonstrate a strategic blend of foresight and execution, with projections indicating a significant increase in production, reaching approximately 900,000 barrels per day by 2024. Occidental Petroleum, OXY. After Chevron, Occidental Petroleum, OXY, steps into the spotlight. Berkshire Hathaway's recent acquisition of an additional 9.6 million shares for $1.1 billion paints a vivid picture of strategic investment and bullish sentiment within the energy sector. This move, part of a broader engagement initiated in April 2019, signifies a robust belief in Occidental's value and potential. With Berkshire now holding a commanding 34% stake, including warrants, the increased interest not only boosts Occidental's visibility, but also highlights its resilience and prospects. Despite the broader energy sector's recent downturn, Occidental stands poised for a potential turnaround. While declining energy prices have affected profits and prompted caution among institutional investors, underlying dynamics in the oil market, such as geopolitical tensions and supply considerations, provide a nuanced backdrop for Occidental's strategic positioning. Though the oil market's volatility, influenced by geopolitical risks and ample oil stocks, has posed challenges, disciplined supply-side measures by major oil-producing countries signal a favorable medium-term price environment. This strategic approach, along with an expected average WTI crude oil price of around $90 per barrel, indicates promising prospects for integrated oil companies like Occidental. Occidental's recent financial performance, despite a year-over-year downturn, surpassed expectations, with its adjusted EPS exceeding consensus estimates by 36.6%. This resilience amidst lower realized prices across crude oil, natural gas liquids, and natural gas reflects operational efficiency and strategic planning. Moreover, the company's robust production, supported by international operations and strong positions in key regions like the Permian, Rocky Mountain, and Gulf of Mexico, further underscores its growth trajectory. Sirius XM Holdings, SIRI. And now, the third addition to Berkshire Hathaway's portfolio is Sirius XM Holdings, SIRI. In a strategic move that has captured the attention of the investment world, Berkshire Hathaway has significantly increased its stake in Sirius XM Holdings by acquiring an additional 30.6 million shares for $150 million. This substantial increase, approximately 35% this quarter, arrives at a pivotal moment as Sirius XM's stock traded between $4.10 and $5.70, showcasing the investment's potential. The backdrop to this investment is the highly anticipated merger between the Liberty Sirius XM Group and Sirius XM Holdings Inc., a transformative deal set to reshape the landscape of satellite radio. Expected to be a tax-free transaction, the merger promises to streamline operations and unlock substantial value for shareholders, with Liberty Sirius XM shareholders poised to own about 81% of the new entity. The strategic implications are profound, hinting at significant upside for Sirius XM Holdings. Furthermore, the negligible downside, even at multi-year lows, underscores the resilience and inherent value of Sirius XM's business model, positioning it as an attractive investment with a compelling free cash flow yield prospect. Looking ahead, Sirius XM's management has expressed confidence in growing free cash flow, bolstered by strategic tax optimizations and a reduction in satellite capital expenditures. The company's guidance towards a robust free cash flow of $1.15 billion for 2023, with expectations of further growth, highlights the underlying strength and potential for value creation in the coming years. Overall, Warren Buffett uses several key investment strategies, including value investing, opportunistic selling, portfolio diversification, selective buying, and maintaining patience and discipline. These strategies reflect Buffett's commitment to value investing principles and maximizing returns while managing risks in his investment decisions. And that's about it for today's video. Do you have more investment strategies that you want to share? Let us know in the comments below. While you're at it, do give this video a like and subscribe to the channel. Thank you so much for watching, and we'll see you on the next one.